Right. So with that said, Bitcoin on the daily time frame, really, really dire situation. Of course, we know that range lows likely mean range highs, and range highs likely mean range lows. That's the idea of a range. That's the whole theory. That's the whole concept. So that makes sense, right? On a bigger time frame perspective, that makes sense. There's always going to be those little slight signatures that kind of hint what's going to happen before it actually happens. And to be quite honest with you, most of the time when you try and find those slight signatures, you're usually digging too deep into things. You're usually overthinking it. You're usually kind of just screwing yourself over by not taking the more simplistic play, which is just range lows mean range highs, and range highs mean range lows, right? So this is a buy, this is a sell, this is a buy, this is a sell, over and over and over again until it no longer happens. That is the sort of way to think about things. And very, very often, I would say probably 90% of people will overlook it and overthink it and dig too deep into the lower time frames and what they're meaning. And they would have just been better off applying that sort of like 100 IQ mentality, that like middle of the curve mentality of just buy here, sell here, buy here, sell here, right? So that is where we're at. We are still at this sort of like macro pivot point where it's like, do you still buy the range lows? Do you take that simplistic mentality and buy them here now for the fifth time? Or maybe if we come back down, the well, yeah, I guess that would be the fifth time. One, two, three, four. So if we come back down again, that'd be number five, right? Do you continue and proceed with that simplistic mentality of, I'm just going to be a buyer at range lows every single time we come back to range lows? And when we do come back to range lows, I'm going to expect mid range and then range highs. And that's it. And then I'm a seller at range highs, and then so on and so forth until it eventually dissolves, until it eventually breaks. Or do you dig in deeper now that we're five tests in, or potentially five tests in, right? Yesterday was fourth, or I'm sorry, not yesterday, but a few days ago was number four, or potentially not five tests in, and now's the time where you want to dig a little bit deeper and be the one thinking harder, putting in the extra effort to try and be 120 IQ rather than just that simplistic mentality. So that's where we are at. That is the only thing that I can tell you on the daily time frame. If we come back to range lows once again, my personal opinion, and like I said, I'm likely to be wrong, and I'm applying my context of the situation. We have never tested the range lows twice in rapid succession, right? Every single time we've tested the range lows, it's been we test the range lows, and then we go to range highs, and then we test range lows again. So we've never had it to where we just test range lows, we see a little bit of a bounce, and then we test the range lows once again, especially not in rapid succession, something like 3 or 4 days after just testing them. So if that happens physically on the chart, the price action this time would be different. It'd be, we tap range lows, we get a little bit of a bounce, and then 3 to 4 to 5 days later, we come down and we test range lows again. So now what you have that time around, if that scenario happens, you have everyone who was a buyer here can't be a buyer once again because they probably haven't even had time to breathe. Right? They haven't had that relief where they've been a buyer somewhere at these lows. They've stacked limit bids near these range lows, and now we got this huge relief bounce into major resistance, and now they can start off selling, right? Or on the way down, they can start off selling, and they're still in massive profit. Now it's more like they bought here. They were willing to make that bet here once again. And we bounce, we get this nice little relief, 15, whatever, 20%, however much it is. And then we kind of just full retrace that all in one daily candle. And now here we are melting back down. So they haven't even had a chance to off sell their positions from down here near these range lows, right? They had maybe the exact middle of the range, and it's sort of like this point of control currently. So we'll draw that out, right? So the exact like middle smack dab in the middle of the range, point of control. We come up, we test it, and that test sees this meltdown and almost a full retrace of the past 3 days, right? So that whole bounce, every single buyer that bought 3 days ago is now under more pressure this time around because they're not even able to uh, realize some profit. They're still sitting in their buys from 4 or 5 days ago. So there's that. There's also the fact that when you jump into these lower time frames, and really the one I want to talk to is er, the one that I want to talk about is the hourly. So we're going to hold off on that thought. But um, our 4 hour time frame, we broke our market structure. So we also discussed as long as we are bullish trending, as long as we have a valid uptrend on our 4 hour chart, it's going to be more likely that this time was no different than the previous times, and range lows mean range highs, right? We are uptrending at that point, and that would be where it's most probable. We continue our trend upwards into the pivot level that I've labeled this the pivot level, this 37K supply zone. And we also have the 4 hour 200s. And to be quite honest with you, reclaiming this region as a whole would really be the sign for me that says this time really is different. And it's probably wouldn't even be just a simple retest of our range highs at that point. It would probably be a much bigger breakout from there. So our 4 hour 200s have consistently been local tops and local bottoms. And that remained true on January 14th, just 2 weeks ago. And it's probably going to continue being true, right? For the majority of this uptrend, for the majority of the price discovery, the bull market, the 4 hour 200s were consistently local bottoms. So during the bull market, we said the first sign of weakness is really once you start to lose those. So that would be here. Then, of course, we got this bounce. This was a choppy zone. This was 2 weeks of chop, but eventually that analysis held true. And then we saw our 4 hour 200s completely curl over and go from very strong. And I'm not looking at price action here. I'm going to turn it off. But we saw our 4 hour 200s go from very strong uptrend to now we're sideways to now they've completely curled over and they're giving us a confirmed downtrend. So flipping them back into support really for me is like that switch that makes me fully bullish again, that makes me happy to be completely exposed to Bitcoin. And that's where I would think the FOMO really would start to kick in. I would think at that point, the range high shorters, the fourth or fifth time around, probably get ran through. They probably get run over at that point. They're and it's going to turn into that whole like denial of this can't keep going, right? Or 47K, we're just going to bearish retest 47K daily supply. This can't keep going. And then it just keeps melting upwards because of that significant shift. So for me, that's really what I want to see. And that's truly where I'm putting all of my weight on. We need that to happen before I can be bullish again. I don't see the whole argument that I'm just going to keep buying range lows and hope for the best when you have the significant shift in the context of things in the terms of the range as a whole uh, happening on the daily, where this time is now different than all these other times, just simply for the fact, oh, not that one, sorry, than all these other times, just simply for the fact that we've broken down already and we're already sort of threatening to come back down to these range lows because we said our 4 hour structure, our 4 hour uptrend is what's keeping us bullish, thinking that this has a strong potential to be the bottom and we see range highs once again, right? So we've now not fully lost that idea, but we've now broken that idea. That idea is no longer a valid argument in the sense that we have broken our market structure in the form of a lower low, right? So forming or following up with any sort of lower high honestly means downtrend, We have now a confirmed downtrend on our 4 hour. And if that happens, what's really stopping us from heading back down to 30K once again? Our range lows. And if we test 30K range lows once again in rapid succession, and the buyers from 3 days ago are now at break even, and now everyone who's longing on this speculative, bleed downwards, or is speculating on the bleed downwards on the way into major support, is now completely underwater. And every single bounce, they're going to want to close their position and get out for either break even or slight loss before a much bigger breakdown happens. Then you have the actual convicted sellers, the people who are bearish on top of that. And it will probably create some sort of cascade, right? And at that point, we're breaking down from the range. It's been tested in succession. Buyers are now exhausted from buying the exact same regions for the fifth time and twice back to back. And on top of that, you have the actual sellers with conviction who want this to break down. So that is not pretty. And truthfully, the hourly time frame, the one that I wanted to talk about, if you could look into what my nightmares look like, it's probably something like this. This is slow, agonizing bleed. We saw this price action on a bigger time frame on our 4 hour all throughout here. All of this is just this slow, agonizing bleed downwards where you have like not even much of a market structure. It's kind of just like these little pity bounces, and then you just fully retrace it. And then you get another little tiny, measly pity bounce. Then you fully retrace it. Then you get this nice, strong bounce, 5%, whatever. That's strong. Oh, yeah, great. And then you fully retrace that in the next two candles too. So that slow bleed, that agonizing downtrend where there is no relief, it's just selling. That is a nightmare for me because naturally I'm bullish on Bitcoin. I'm very exposed to Bitcoin. So if you had an insight into what my nightmares would look like, it would be slow, agonizing bleeds like this, right? So we're seeing something similar play out on the hourly time frame right now. This is what, 15 candles of just selling? It's just consistent selling. There's no bounce. Oh, look at this. We got these nice wicks on the bottom. We got a neutral, a bullish doji, right, at support. And then we just melt down, right? And oh, now we're at support. We're testing 4 hour demand, and we might have some lower time frame moving averages confluent, and then we just melt down, right? And then, oh, look at that. These crazy wicks on the bottom of the hourly candles, right? And then our 4 hour might have a nice candle close too, and then melt down. And we just fully retrace this slow, agonizing bleed. So now everyone who is longing here gets stopped out, or they're now underwater. They long and now they're underwater. They long, underwater, long, underwater, long, underwater. And that just continues. And if that continues all the way down into this demand zone again, who's going to be a buyer? Right? It's the people who didn't get a chance to buy the demand zone the last time, or still have the belief that, you buy range lows, you sell range highs. You buy range lows, you sell range highs. But remember, those people just bought 3 days ago as well. So unless they manage to get out at the exact top of the pivot level, the mid range, that point of control, then where does the buying step in? So from here, if we continue the slow, agonizing bleed, if we continue this massive downtrend where there's only sellers, and we might get a nice pity relief bounce or whatever, and that just leads to a 4 hour lower high and confirmed downtrend, and we just continue the slow, agonizing bleed into this 30K demand zone. The idea behind it is eventually it's going to get accepted, right? And what I mean by that is once you have this um, this level that everyone and their mother is watching, and every single time it gets tested, it is just, oh, you guys had your fun. All right, Bears, calm down. You had your fun. We tapped 30K daily demand. I'm buying here. I'm selling 42K, right? And then you sell 42K, and then the next time comes around, and now it's like, oh, I'm just going to buy 30K again, right? It's that demand zone. It's range lows. Like, get the fuck out of here, bears. And you buy the range lows and things play out, right? And then it comes back down again. And it's like, all right, yeah, I'm just going to buy range lows again. I'm just going to buy 30K. Like, get the fuck out of here, bears. Like, screw off, right? And then you buy and it plays out. And now it's, all right, yeah, well, I'm just going to buy 30K again, right? And then it's, okay, well, we're going to buy 30K again, right? Guys, guys, we're gonna buy 30K again, guys, and then you just capitulate. So that is the acceptance. That is, the sell pressure is so strong, and there's so many people who just want to get out, that eventually you go from 30K is an obvious buy to now 30K can't hold. It's now 30K is a buy, and we immediately push this back up into 35K, and then from 35K we reclaim that, and we go on to 37K. That's our pivot level. We reclaim that. We go to range highs every single time, right? To now it's like, okay, well, I'm okay with this being at 30K. That doesn't really bother me, or I'll take it. Or all right, I'm okay with this being at 29.7. That's fine. Buyers will step in eventually, right? They have to. Okay, well, we're just slightly below the range, so that's fine, right? So now you're getting accepted into these range lows. You're getting slowly, price action is now dissolving through the exact same demand zone that was previously giving you 42K, right? It was previously 30K gets hit, we go to 42K. So that is now shifting at that point. If we see that happen, it will likely shift into that acceptance where the bounces get weaker. The limit buyers that are still lingering within this region, still willing to take that 30K to 42K bet, have now been met with this like massive market selling of people who are underwater and people who have lost conviction that the range is still going to hold. So this is exactly why I was not willing to let this live stream be postponed into next week. It is a dire situation. Don't let anyone tell you different. This is exactly where we're at right now. We can bounce. That's perfectly fine. If we don't bounce and reclaim regions, if we don't reclaim that hourly 200 MAs and the 33.7K 4-hour supply zone now, it means nothing. So if we don't bounce into strength, that's likely what we're going to see happen. So that's why we got out of the long trade. Probabilities are no longer in our favor. It seems like the market is shifting. It seems like the context of this time around is now different. And I know Bitcoin's pumping as I say this, but again, the strength does not come in with the percentage bounce. The strength does not come in with the length of a wick, right? How long your wick is. It means absolutely nothing. What we should be paying attention to is, are we reclaiming levels? Are we flipping trend? If we do that, then the whole we're going to get accepted into 30K and eventually break down, then that completely goes away. Then it turns back into the exact same argument we had yesterday in yesterday's live stream prior to this slow bleed downwards. And it goes back into, hey, we're uptrending, we're above key levels, so why wouldn't we just head up into 37K, and then went from 37K, we reclaim that, and we see inevitably range highs again, and then we just see the range play out to its full effect once again. We're uptrending, we're reclaiming levels, we're above key regions, and so as long as all of that remains true, then it would be likely that we just see the range play out to its full effect, and the range playing out to its full effect means 30K is a buy, 42K is a sell, 30K is a buy, 42K is a sell, over and over and over again. So if it goes back to that, if we turn back into an uptrend, if we can manage to reclaim the key levels, it goes back into the exact same argument that we had in yesterday's stream. If we find a lower high on the 4-hour, if we never see the strength come in, if we never manage to reclaim any levels or flip any trends, then it's likely that we'll see the range lows again at 30K because we know that there's not much stopping us from doing so as long as we're downtrending and below the mid range. And then if we see 30K again after just seeing it 4 days ago without seeing range highs in the meantime, then we might get accepted through the bottom of the range entirely. And then getting accepted through the bottom of the range might mean a bigger downtrend on the daily, and a bigger downtrend on the daily might mean a bear market, right? So level, 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 domino effect, one knocks over the other. All of a sudden, you have a pretty solid idea of what's happening macro. So just take it time frame by time frame. Don't feel the FOMO in a downtrend off of what could be another 6% pump from current price. It doesn't mean too much. If we see strength, the argument goes away. The bearish narratives go away. The fear goes away. The range's full effect is more likely to play out at that point. So take it time frame by time frame, day by day, level by level. All right. Just keep your head on your shoulders. And we talked about this too. Martian did a really good job. For anyone who did manage to get in on that long trade, I believe most of it was fully filled within the entry zone. At least the top to middle of entry was about, you should have gotten a pretty solid fill on that long trade. And he managed to take profit twice within or before heading up to these hourly 200s. And the hourly 200s, as we know, as of recent and historically, if you have been in signal profits for a long time, you know how much I love these hourly 200s, and you know that recently they've consistently given us local tops, local bottoms intraday. So we discussed this, right? This was one of our scenarios that we talked about, which is as long as we're still below the hourly 200s, there's still the chance that they give us a local top and we break down from our trend entirely. And if we break down from our trend entirely, then we might see range lows again. And if we see range lows again in rapid succession, then we might be accepted through range lows and then bigger downtrend, yada yada, right? So getting rid of all of that is just simply when we reclaim the hourly 200s and when we reclaim that 33.7K supply zone as well, when we flip our hourly structure bullishly, when we break our 4 hour structure back bullishly, that's when the whole fear, everything that I just said, goes away, or at least is much less significant, much less worth talking about. But here today, right now, whether we bounce another 6% or not, it is a very realistic probability. So that's where we're at right now for Bitcoin. I know no one likes to hear these live streams, but it's just what price action is telling us. Okay. So keep your head on your shoulders, take things level by level, and we'll get through it. Right. We've has SP, by the way, has historically done very well throughout bear markets. So I think in the 2018 bear market, they had something like an average 70% portfolio growth through the entire bear market. So whether we go down or up, you shouldn't care too much unless you're in spot Bitcoin, which I am. I'll let you know straight up. I'm in spot Bitcoin, so I do care. But you shouldn't care too much because you're probably going to make money either way. So that's the beauty of the market. All right. So, any questions on Bitcoin before we move on? All right. Let's move on to ETH USD. All right. So ETH USD still kind of lingering at this region, the same region that we were at for the past 2 or 3 days. And it's just this zone where we have this daily demand and 200 daily moving averages and a little bit of daily demand beneath that as well. At 1730-ish. So still kind of lingering. But as we said yesterday, ETH/USD on the daily is still confirmed downtrending. Where Bitcoin is in a range, we're going sideways, 30K is a buy, 42K is a sell. ETH/USD is downtrending on every single time frame into support. So it's a much different context. It's like this is what you want the BTC chart not to look like. We're already there for ETH/USD. So on the flip side, if the market bounces, this is probably going to bounce harder because we bounce harder, we're going to start breaking structures, and the structures to start breaking are all the way up here. Our last lower high on the daily was all the way up at 2630. So if for some reason we do get some magic V-shaped reversal and we just rip upwards, who knows, maybe Tesla announces that they bought $100 trillion worth of Bitcoin or whatever, right? And ETH/USD is probably going to outperform just because it's crypto. That's the way things work, right? The things that look shittier bounce harder. So higher risk, higher reward. And that's just the way it is. So downtrending as of right now into major supports, so a much higher risk. And we already know this because we looked at dominance yesterday, and I'm sure I scared a lot of you out of altcoins yesterday. I'm probably going to do the exact same thing here today. So ETH/USD downtrending on our daily time frame. That's basically all you need to know right now. And then for the 4-hour chart, we had a little bit of relief. We got a high and then higher low, but then we saw that higher low lead to a lower high, and now we made a lower low. So we are confirmed downtrending once again on the 4-hour. This is very, very reminiscent of all of this price action. It's all just been that slow, agonizing bleed. You might get a bit of relief, and you might even flip your structure, and not even flip, but just break your structure bullishly, and it ends up not meaning too much. So this is why we say, or this is why I say, just sort of, if you are that investor sort of mentality, if you are the person who wants to be buying ETH, if you are macro bullish or whatever it may be, it just makes a lot more sense to expect to be able to buy lower, and in the meantime, buy major demand zones, right? I'm a buyer here at 1950. Great. Previously, that would have done you extremely well, and it's still major support. So being a buyer here is still justified. I'm a buyer here at 1950. I'm a buyer here at 1730. I'm a buyer here at, I don't know why this demand zone is really marked. 1590, I'm a buyer at 1430, so on and so forth. And I'm going to expect that my bids will eventually get hit because we're downtrending. And if they don't get hit, we'll see some strength in the meantime, and I can cancel those bids and start allocating higher up or whatever, or expose myself through derivatives, future tradings, longs, things like that, instead of buying spot or whatever it may be. You can take the other sort of like approach to it and just take the safer approach, which is I'm likely going to be able to buy lower. So let me just put my bids lower. And in the meantime, if I see strength, I'll adjust. We saw a little bit of strength. We saw a glimpse of hope, is what I would call it, really, because it's not even true strength. It is a high, which is still a lower high, right? So you got lower high, you got a higher low, so that's your glimpse of strength, and then it meant nothing, and you fully retrace the entire bounce. So, downtrend. Very, very potent downtrend. We also discussed if you are a scalp trader, if you are looking for the more speculative longs in the meantime, you can zoom into lower time frames. So something like zooming into this hourly, the hourly 200 MAs have consistently given us local tops and local bottoms for ETH/USD as well. Mainly just recently, not historically like Bitcoin. They're very clean for Bitcoin, just in general. But for ETH/USD, it's mainly just been recently. So the recent price action has been very solid for these hourly 200s. So Reclaiming something like our 15-minute trend probably sees a bigger bounce up towards the hourly 200s. And then the hourly 200s might mean that we're already bullish on our 4 hour. We have a confirmed uptrend. So now maybe we've bottomed on the daily. And now we can start bouncing anywhere in between current price and 2640, where our lower high on the daily resides. And our lower high on the daily would still mean that we're downtrending on our daily, but in the meantime, there's ample room for scalping to the long side to make a little bit of pocket change in the meantime. Right? We always discuss for ETHUSD the main thing to watch are probably these 4 hour 200 moving averages. Unless you reclaim those, there's really not too much of a bullish argument looking forward macro wise. They consistently give you macro tops and bottoms. So if you're below them, there's a good chance that you could bounce significantly hard, something like from current price into the 4 hour 200s, and they're going to give you a local top as they've done historically consistently for the past year. And it's just that simple. So reclaiming them, what does that tell you? Getting them shifted towards the upside again with bullish momentum, what does that tell you? Probably means a lot more upside is on the way. Probably means your FOMO from below was unjustified because there's ample room for profit potential or upside potential now that we've gotten rid of the most pivotal argument for this chart, and it's now a bullish argument, right? So that's truly the sign of strength. In the meantime, if you're looking to play ETHUSD, it's kind of just that, or it should be just that sort of like investor mentality of, I'm going to look to dollar cost average, 10% of my overall position here at major support at 1730 and then 1430 and 980 or whatever. And in the meantime, if we show the strength would be reclaiming those 4 hour 200s again. Then that makes sense to start canceling bids and hopping in, trying to ride the wave. So if that happens, that should be the sign that you should stop expecting your bids to get hit. As long as we are still downtrending on the daily at the very least, but as long as we're still downtrending on every time frame as we are now, then it probably makes sense to expect lower and then be pleasantly surprised if you don't get lower. Right? So hourly, we said hourly 200s are a key resistance to watch. And if we reclaim those, then our 4 hour trend would be bullish again. And now we have some profit potential for longs. Another 15% into our next major resistance. That's that supply zone. And it would line up nicely with the 4 hour 200s once again. Right? And then we said we can take it a step further. Intraday, these are the people who are looking for really quick scalps. And we mentioned, where was it? We did our live stream yesterday. Yesterday was the 24th, and we did it around 3 p.m. Right? Hold on. Am I going crazy? Where were we yesterday where we talked about 15-minute 200s? Or was it 5-minute 200s? Can't even remember, honestly. I can't remember. Maybe it was. It must have been somewhere over here. But we talked about something about reclaim these levels, right? So now you're above 1960, now you're above the 15-minute 200s, which do get respected. And then it makes sense to look for a long bounce into those hourly 200s. And then you take it level by level from there, right? So you would long, get this little bounce, you'd be a take profiter, take profiter, take profiter, take profiter, and you reevaluate here. Then you go for the next level, you look for that bigger bounce upwards. Kind of copy and paste that mentality, copy and paste your trade, adjust it accordingly, and then you take it from there. Now from there you reclaim that. You take it to your next level, and you go from there. Right? So level by level by level, time frame by time frame by time frame. And as each time frame starts to flip bullish again, by reclaiming levels, by flipping trend bullishly, your probabilities increase. You're now trading the trend, right? So you're just trading the higher time frame trend, or you're trading the time frames in between themselves. So like the hourly on the way to test the 4-hour trend would be from here to here. And then the 4-hour trend, or the 4-hour 200 MAs, the 4-hour time frame flipping completely bullish, going on to test the daily trend. I'm sorry, wait. I'm losing my mind here. No, it would be. I'm losing my mind, guys. I'm literally like, this vertigo is so potent right now. It's kicking in. I'm really sorry. I'm like rambling. I don't even know what I'm saying now at this point. I think it's just best if we move on. Oh my god. Ugh, I'm losing it, guys. All right. I apologize. ETH BTC. Oh man. Okay. ETH BTC. We came close to our weekly demand zone once again. And we talked about um, kind of the same scenario. If you were to look into my nightmares, if you were to look into my worst fear, it would be something that looks like this. Just the slow bleed into major demand zones and no relief at all whatsoever. And you just continue all the way down into major support. So we're at major support now, or we came close to it, and it's weekly demand. So if you are that speculator, if you are that person trying to switch your or rebalance your portfolio from BTC into something like ETH, then these are the zones to do it at. It's weekly demand zones, 200 daily moving averages, daily demand, things like that. That's the time to be the speculator. That's the time to slowly expose yourself and continue expecting downtrend because you are being preemptive. You're jumping in before you actually see the strength, right? But just expose yourself at areas where it makes sense along the way. So the weekly demand zone is a good place to do that. And we saw it almost tapped here today. And so far, it seems like we've gotten a pretty solid bounce, but we still need a lot of work for ETH/BTC because I can't imagine our lower time frames have shown any real strength as of yet. So we'll move on. I think Okay, I know where I'm getting confused now. So the analysis I was trying to make for ETH USD, I think it was an ETH BTC analysis on the 15 minute. I think that's where I'm screwing up and driving myself crazy. I'm 99% sure. So our 4-hour, yeah, still downtrending. This is a good, little bounce or whatever, 3% or so, but it still means nothing. How do I know that this time is any different than this time or 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 this time? Right? That's the idea. And then you take the context of that, and the context of that is we came down to this weekly demand zone, so maybe this time is different. So if you're going to take that speculative bet, if you're going to be the longer term macro investor, the dollar cost averager um, over the course of time, then that's the place to do it at. So that little tiny bit of an argument is present, but it's not potent. It's not something that sticks out currently, just for the simple fact that we haven't reclaimed or even broken our 4-hour market structure. It's still fully intact. It's still fully bearish, saying lower highs, lower lows. So 4 hours still needs a lot of work. You want to see a higher low, I would say somewhere higher than here. I'm sorry, higher high, and then a higher low anywhere between current price and this low. So once you start to get that, and it can happen in a variety of different ways. It can be, lower high and then higher low and then higher high from there, or it can be higher high and then higher low anywhere between here and here, right? So you could higher low and then uptrend. So variety of different ways you could watch it play out. But basically that's the gist of it. You want to see an uptrend. And then from there it would seem like your more speculative analysis of I'm just going to buy the weekly demand zone has held true, and we're going to start bouncing on a higher time frame perspective from that point forward, right? As of right now, it is still largely speculative. So, hourly 200s for ETH BTC as well gave us a local top last time. They were pretty huge for the majority of this move upwards. When everyone was largely bullish on ETH and screaming for the flippening, the hourly 200s consistently gave us local bottoms, and we saw them pretty nicely respected along the way for recent price action. Obviously, not perfect, but not terrible either. And we saw them act as a local top along with some confluence in supply not too long ago. And so the idea is if we break any sort of downtrend, we're going to watch for those areas to flip into support before getting overly bullish on the way, right? And that would also mean we're breaking our 4-hour structure. So now our 4 hours bullish, we've reclaimed our hourly after tapping weekly demand. So it would seem like a bigger bounce is in play. Right? And from that bigger bounce, we're just looking for a lower high on our daily, anywhere between here and current price. Right? So anywhere in this price action, we could bounce to. So that's where it would be appealing to take some long setups on ETH BTC. And then the 15-minute, this is where I absolutely confused myself just now on ETH USD and had a complete breakdown. Sorry, excuse me. But the 15-minute for ETH BTC, we're consistently finding local tops along these 15-minute 200s. So this is where I was getting confused. And we talked about this yesterday, not the ETH USD chart on the 15-minute. We talked about ETH BTC on the 15-minute. And as long as we are below these 15-minute 200s, and this is our current trend, and this is the momentum of the current trend, which is we are so strongly bearish that people are so willing to get out that they're using 15-minute 200s, right? 200s on the 15-minute time frame to find local tops before continuing that slow bleed, that agonizing downtrending price action, right? That's how desperately that they want to get out. So if we move on to reclaim these 15-minute 200s, that's when we can start taking it level by level. That's when it starts to look likely that we're going to break our 4-hour structure bullishly. That's when it starts to look likely that we might move up into our hourly 200 MAs along with this supply zone, right? And we take things level by level from there. So the setups drawn were on the ETH BTC chart, which would be something like this. And it was we flip this zone, probably going to see the next level tapped. So we can say hourly 200s, breaking the 4-hour structure, 2.4-hour trade. Maybe you hold that into the next supply zone, or maybe you take a whole new setup from there. Oh, sorry. And just continue with that mentality on and on until eventually you're in this swing long and you're betting on a bounce into a lower high on the daily, anywhere between 0.077 and your entry. So that could be the 4-hour 200s, that could be the 0.07 supply zone, that could be the 0.073 supply zone. And once we reclaim that, it would seem like there's not much stopping us from breaking that daily structure back bullishly once again as well, and heading back up into that weekly supply zone. So that's the analysis I was trying to make, and that's where I wanted to say that whole level by level sort of thing. But I kind of broke down in the middle of that ETH USD analysis because I was saying it and it wasn't making sense because it didn't seem familiar to me. This is what I meant to say. All right. It's still true for ETH USD also. It's the same exact mentality. It's just copy and pasted. It's just, I was like, this does not seem right. But that's where we're at right now. So to make the analysis, to make the assumption that this time still has potential to not be any different, seems to be the right move. And that kind of seems obvious when we look at the 15-minute time frame. So mainly just looking at the 15-minute 200s. Once we get rid of that argument, probabilities start shifting. This time starts to look different. The whole context of the situation coming close to the weekly demand zone, things like that. That's where that starts to pile in. But for now, this time has not been proven to be any different than the last however many times. Right? So, more likely that the trend continues to be the trend and the slow agonizing bleed, the whole pile up of everyone who's speculating on long bets for all of this price action are probably going to be more and more eager to get out on every single bounce, and it's just going to get faded away. So that's still just as much of an argument here today as it was yesterday, even after bouncing 4% from the lows. So it didn't really mean much. And then last, we can talk about dominance again. I'm going to kind of run through this. I'm going to make this analysis a lot shorter than it was yesterday, because really anyone who wants to know my thoughts on dominance, you can just go to yesterday's live stream, and it's not much different here today. Dominance chart still scares me. I still see no reason to be exposed to altcoins. I see them as a tool of leverage for making more Bitcoin or for making USD faster than what I can make it on Bitcoin. So if they are not outperforming Bitcoin, I have no interest in altcoins, period. So currently, we knew that the dominance chart was pretty exhausted. We knew that some mean reversion was likely. That sort of white swan thinking. Mean reversion is likely eventually, but we don't know when. So rather than speculate when, we can just assume that the mean reversion is never going to happen and the trend is going to continue to be the trend. And once we see reasons to believe that the when is here now, this time is different, then we adjust, we get the fuck out, and we take it from there. Right. And that's where the mean reversion has sort of more potential to play out and a higher probability to play out. And we can assess it from there. Does the mean reversion lead to 4960 and we just tap there? Does it just lead to, this is a top and we just downtrend forever and ever and dominance just only goes down for the next, whoever knows, for the next forever? Or does it lead all the way up into our 200 dailies, our 5780 supply zone, our 62 daily supply zone? Who knows, right? Who cares really? It's just the simple fact that you probably don't want to be exposed to altcoins for any of it, right? So whatever happens, you probably want to miss out on that and then jump back in once probabilities get shifted back into your favor. So for me, the daily time frame is not really the scary one. I mean, truthfully, it was always scary. It was scary for all of this price action just based off of the fact or the theory of mean reversion, right? It's always been scary. What scares me is the 4-hour and the hourly charts. 4-hour chart consistently been local tops and local bottoms for dominance historically. We can see that. And so the argument was, as long as we are below the 4-hour 200s, and for majority of this downtrend, we weren't even able to test them because that's how uh, momentum, strongly momentum based. I don't know what I was trying to say, but that's how strong our momentum was towards the downside. We couldn't even get a bounce to test our 4-hour 200s. And we know that those are really like the line in the sand for dominance. If we're above them, they likely act as local bottoms. If we're below them, they likely act as local tops. So the trend was so strong that we couldn't even come up to test the 4-hour 200s to see if they would act as a local top. Finally, we got that. We see them hold. And then now we've completely flipped them. We're now trading above them. They're now more likely to give us a local bottom. And when you turn off the price action entirely, it seems like the environment has changed. Right? So all of this price action, probability wise, momentum wise, trend wise, what's the likelihood that you just see this crazy reversal towards the upside for dominance when your momentum is very strongly down? I would assume it's not very likely. So the exact same argument for all of this price action, probably not very likely, and the probably ended up being what happened, right? The more probable scenario. So now that we're not only flipped them, we're not only trading above them, we're not only just getting them neutral, but they're actually sort of curved upwards just slightly. That tells me that this time is probably different than all these other times. So, just simply put, until these curl back over again, until we lose them, there's really not too much for me to be interested in for altcoins. It's more so I would rather just hold Bitcoin and assume that our altcoins are going to have a hard time outperforming them anyways. So that's where my head is at. This mentality could work. It could not. It could be the thing that saves you, and you might come back a year from now or months from now, or who knows, and say, Mercury, thank you so much. You saved my portfolio. It could be the thing that makes me look like a complete idiot for being bearish, and this is the exact top, and we just downtrend forever and ever and ever. And altcoins go to new all time highs tomorrow, and everyone thinks I'm a shit trader, right? But it is the exact same mentality here that we had for all of this price action. Exactly. It's copy and pasted. It's just inverse. The exact same mentality that had me bullish on altcoins from January 14th all the way into June 9th, or really May 17th, because we said this is the next demand zone. I'm going to take profiter here. If we lose that, I'll look for new all time lows, right? So the exact same mentality that had me bullish on altcoins and heavily exposed to altcoins for the entirety of these 5 months is the exact same mentality telling me to get the fuck out of altcoins here today. So it could work out just as well as it did for the 5 months prior to me making this analysis, right? On the bullish on altcoin side. Or it could have very well been, yeah, we curl over a bit, and you're saying, don't be a scaredy cat, don't look for the doomsday, and then we just break out forever and ever, and you should have been the doomsday caller, right? That had all the potential to play out just as much as it has the potential to play out here today, to where I'll look like an idiot for being bearish on altcoins. But it's the exact same mentality. If it works, it's likely going to really work. If it's wrong, I'm probably going to miss out on a lot of the fun for altcoins and assume that I'll be able to get in later along the way. Because if the fun happens, right? So from current price, Bitcoin dominance, all the way down to 43 level on dominance, that's probably altcoins seeing 30 to 40% pumps, right? I miss all of that. All of it. I'm not exposed to altcoins. If that happens, I miss all of it. I miss all of the fun. If it doesn't happen, and the same mentality that had me bullish on altcoins for all of these 5 months keeps me out of altcoins for the next who knows how long, I'll look like a genius. Just for simply looking at, is this time physically different or is it not? And the price is telling me this time's different. So I'm assuming it's different, right? I'm assuming that the trend has completely flipped, which for me is the exact same mentality that we had here. All right. I know I sound like a broken record, but that's where I'm at, right? And that's not going to change tomorrow, even if we do melt down, right? Even if we do melt down, it's not going to change my mentality. I'm a trend trader. I like to focus on what I think the market's going to do weeks, months from now, not what happened here today. So that's where I'm at. And that's probably where I'm going to be at for a lot of the future live streams. So